Hi everyone, I'm Ryan Champeau with the Titletown team at Homestead Realty. This is our first video in a series of videos going over everything in the Northeast Wisconsin real estate market as far as buying, selling, financing, getting an inspection, title, everything you can think of, we're going to be talking about it. So if you have questions, you can always email me or give me a call and we'll add it to the next week's section. Today I am here with Jason Fischer from, he's a branch manager at American Mortgage and Equity Consultants. Hey Jason.
Hey Ryan, how you doing?
Good. All right, so we're going to talk about Homepath mortgage financing, and this is something not a lot of people know about. It's an insane program. It's a really good deal for people. And Jason, I'll just let you dive in right away and talk about it.
Sure, yeah, thanks a lot. So basically, with Homepath, obviously there's a website that you can go to, which is just homepath.com, that you kind of look at all the listings here in Brown County or anywhere else that you're looking for a property, here in Wisconsin. And it's not just a program that would be available for, first-time home buyers, repeat buyers, or investors. Truly is a program for, available for anybody looking to kind of get some instant equity with an actual foreclosure. Long story short is, Homepath, with it being a Fannie Mae foreclosed property, they do realize that obviously some of these properties, can be in distressed condition. So probably one of the biggest incentives with this program is, not having to do an actual appraisal on the property.
Now, let me stop you right there real quick. On a normal home sale, you're going to be having an appraisal done. How much does that typically cost that you're saving in this program?
That just all depends on what type of an actual loan it is.
Okay.
On a conventional loan, normal cost of an appraisal would be $400, and then for obviously a government loan program like FHA, you're probably looking at more, closer to $450.
Okay, so that's a good savings right off the bat, just that alone.
Yeah, absolutely. So they do advertise, obviously, a Homepath with a 3% down payment. I kind of always recommend a minimum down payment of 5%, because then you start getting a lot closer to, market interest rates with a little bit more of a down payment.
So sorry, I'm going to jump in again. Typically, if you put a little bit bigger down payment, your interest rate's going to go down. If you stay low at the bottom, it's going to be a little bit higher than it normally would be.
Correct.
Okay.
Yeah, kind of the easiest way to kind of sum that up is obviously the more of a down payment, the less risk it is for a lender.
Sure.
So that's what's going to yield you obviously a little bit better of an interest rate. But if it's owner occupied, you can get into the property with a minimum down payment of 3%. And again, I'd obviously recommend 5%. If it's a single family 1-unit property.
Okay.
If it's owner occupied and it's a 2-unit to 4-unit property, then kind of the rule of thumb there would be an extra 5% down, or a minimum down payment would be 10% in that on that option. And then the same thing kind of applies to investors. I think this is a great program for obviously somebody looking to scoop up a potential long-term investment. As an investor, the minimum down payment would be 10% for a 1-unit property. And then a rule of thumb again, 2 to 4-unit property, an extra 5% down, or 15%.
Sure. Okay.
So
now, I'm just looking real quick in the notes from Fannie Mae themselves. It says it can be that your 3% down can be a gift or grant. Is that accurate?
That's going to be something that's investor specific.
Okay.
This is kind of treated as like a normal conventional loan.
Sure.
So a bit higher credit score requirements, and typically the first 5% of the actual funds for the down payment have to be your own money.
Okay.
Good news is obviously it's tax return time that's right around the corner.
There you go.
You can use the down payment for that.
Okay, and 3 or 5% is relatively low. On a $100,000 house, it's $3,000 to $5,000, which isn't real crazy.
Yeah, and kind of another thing on that too is, obviously in a foreclosure, I mean, typically these buyers are getting these properties, well less than fair market value. So another option would be to, get them in there with a minimum down payment of 3%, maybe paid a little bit higher of an interest rate, and then once you're on title of the property for 4 to 6 months, then we can look at doing a refinance and
Sure.
taking into account, appraised value.
Sure, that's a good idea. Okay, now let's talk about the PMI, or private mortgage insurance. I guess first of all, explain what that is, and maybe some typical costs. I know it's going to be different on every property, but let's get into that part of it.
Yeah. So, probably the biggest loan that we do on a monthly basis would be an FHA loan. I'd probably say 70% of our buyers are always doing FHA.
Sure.
So I'm going to kind of use that as an example. So if you're doing a regular $100,000, just for easy math, purchase price on a property, FHA is a little bit different, requires a 3.5% down payment, but you're probably looking at minimum right around about $100 a month just for monthly PMI private mortgage insurance. And basically what PMI is it's an insurance that protects the lender in the event that the consumer defaults on the loan and they have to foreclose on the property.
Sure.
So it is kind of, wasted insurance that you're paying on a monthly basis because you're not putting 20% down. That's kind of the one huge advantage of Homepath is you can get into that property with a minimum down payment, no appraisal, no private mortgage insurance.
Okay. And do you have any, I know it's kind of a loaded question, but a ballpark amount of, say, on a $100,000 property of mortgage insurance?
Yeah. Probably for FHA, a guess would be probably right around about $100 a month.
Okay.
And if you were just doing like a normal conventional loan with a minimum down payment of, maybe 3 or 5%, I would say it'd probably be roughly about $70 to $75 a month.
Okay, so really, $100 a month and the no appraisal, that's $400-ish right up front. That's good savings. This is a really good program.
Yeah. And honestly, especially if you're looking at doing one of these foreclosure properties, either as conventional or FHA, I just think that the biggest incentive out there is obviously not having to appraise a property, because how many properties do we run into issues, with FHA financing on a foreclosure property that's always sold as is.
Right. I'm running through one right now where they don't like a pool outside. FHA doesn't like it, and all of a sudden the loan might not go through because they're FHA financing and there's a pool. It just avoids those real weird issues that may come up, and it seems like a good program. So, Jason, how can anybody contact you if they're interested in looking into this type of loan?
American Mortgage Equity Consultants, I actually run here in Green Bay. They can give us a call at 920-632-4902, or probably the first piece of the puzzle would just be to kind of start on a pre-approval. They can go right to our website, which is a secure online loan application, and that's just www.wi-loan.com. Okay,
perfect. And if you guys didn't catch that, also on TitleTownTeam.com, there is on the left-hand side, there's a tab, How to Buy a Home, and on there you can just click on the little link or the icon, and it'll send you straight to his website where you can get pre-approved. It's real quick and generally easy to do. Jason's awesome at getting back to everybody, and there's no issues there. One thing, most of you have been through my free foreclosure website, browncountyforeclosures.com or foxcitiesforeclosurelist.com. After you sign in, it goes to the properties. I will be, within the next day or two, updating those properties. So on the right-hand side, it'll say if it's a Fannie Mae home. If it's Fannie Mae, then most likely it will work in this Homepath mortgage. Not all properties are. Is that correct, Jason?
Yeah, it just depends. There's two different types out there. I think we actually discussed this, last week. There's the Homepath mortgage, and then there's also the Homepath renovation financing. Unfortunately, at this point in time, our company doesn't participate in the renovation financing, just the actual Homepath mortgage.
Sure. Okay, so all right, so that's about it for this week's. Again, if any of you have any questions, you can give me a call or email, give Jason a call or email. We'll be happy to answer any of your questions. And Jason, did you have anything else to add?
No, I think that's it.
All right, sounds good. Thanks for joining in today, and everybody have a great week.